and chalk and cheese with regards to what we see globally and what we see coming through in Nigeria. So it seems very much protected from a lot of the global worries. The Naira flat, no real movement there, very stable performance is what we're seeing.
Yeah, I mean, it's a bit interesting comparing what's happening worldwide vis-a-vis what we're seeing in our country. I think overall, we've tend to see a bit of interest in the emerging markets, and I think Nigeria is getting the benefits of such interest that we're seeing currently. I think if you look at the factors that might begin to bring or cause some sort of concern for the country, I think those factors are pretty stable or on the healthy side. Overall, it seems as though it's a pretty good call, and for now, you can't see any reason to rock the boat when there's no reason to rock the boat. So I think all these factors are pushing towards the stability in the currency, not undermining the fact that we've seen healthy growth on the reserve level from the start of this year, even from the average of what we had for 2011. You see the reserve level hitting about $35 billion. That's a steady growth for the first quarter. That on its own, and it has held on pretty well, and it has provided a bit of support for the currency for now. Like you said, I mean, from the start of this week up to today, Naira practically trading flat. Overall, demand pressure is a bit waning. Not much demand, especially at the CBN window, which is a very good gauge of the demand levels. You actually see the currency strengthening at that window, and also you're seeing tickler flows coming in to support the currency. So overall, the picture actually does look very good.
Okay, well, a very positive scenario that is playing out. But the truth is, I mean, just taking a look at the bi-weekly auctions that do occur in Nigeria, we're starting to see the central bank increasing dollar supply, but there is enough demand to meet the supply that is coming to the fore. Just tell us about this balancing act that does occur on a bi-weekly basis.
Okay, I think a couple of times I've always mentioned that CBN has actually evolved in the way they respond to demand pressure, especially at the window, and especially when they see prices, the way prices are moving out in the interbank market. I think these are two factors that they actually do watch very well. I think when they see expect or anticipate some sort of increased demand, we actually see the amount that CBN would offer at the bi-weekly auction actually increase. If you look at the trend from the start of this year up until now, we've seen a steady response to demand factors, and that really has been a bit different from the way it's used to play out previously. I mean, on a lighter note, you could say that market could get a bit of direction of what the demand levels are from what the CBN show at the window on the bi-weekly basis. That has been that has played out well so far. Demand pressure in the past 2 weeks have reduced. We've seen the amount that CBN has offered reduce also. We've seen the currency actually gaining strength, especially on the CBN window. And looking at their activities and the response to it, I think the governor has consistently mentioned that the CBN is able and they're willing to meet all demands that come into their window, all legal permissible demands that come into their window, and they've done it so far. And in terms of price stability, which has been a key factor for them, I think they've the way they've responded to the demand and the way they've managed the auction so far, in a way, it has communicated very good concept or method of ensuring price stability, and they've worked on it and just played that so far so well.
Nwabueze, if we could also just focus on the main auctions that actually occur, the bond auctions that occur. What is your sense with regards to the stabilization of the yields? Because we've seen a slight downtick in the yields, but still sitting at very attractive levels.
Well, I think for the auction, you've seen a lot of strong for offshore interest at the bond auction, at the bond market in general, not only in the bond market, in the fixed income space completely, from the short end to the long end. You've seen a couple of strong demand, especially from offshore interest, that has continued. You know, it's a case of we've got 2 MPC meetings in a row, no change in rhetorics, no change in their statements, no variation in terms of, okay, any potential hike. It seems as though inflation is being contained, and like I mentioned earlier, indices point to a bit of good stable levels, and obviously nobody wants to miss the ship at the departure point at the port. So everybody wants to get on the ship at the port, so you continue to see such interest coming into the country. In terms of real returns vis-a-vis inflation rate, the returns on those instruments provides very good real returns. I mean, so I don't think you'd see any different structure from what's playing currently. We would continue to see a slow downtick in the yields over the period until maybe we assume that there's some form of equilibrium in the yields at a particular point in time. But for right now, we don't think that there's any change in the picture.
Nwabueze, I mean, we also know that there's been, I would say, a tug of war between equities and fixed income and the likes of the bonds in Nigeria, because we speak to the investors out there and they're saying, you know, we've got to get the retail investors back and not to buy only into the bond, into the fixed income space because they've got high yields, but also to get them back into the equity market. Again, I talk about this tug of war. Who's going to win at the end of the day?
Now that's there could be arguments on both sides, but I would say for right now, you would get the fixed income space would actually be come out a good winner for now. I think generally people have memories of the stock market and how things have gone in that space for a while. I think that memory will stay with them for a little while, just to see how things play out. Because of that, you might see the fixed income market come out the winner.
I mean, it's a safer bet, and we're looking at much higher yields, you know, that are being offered at this point. So it basically is a no-brainer. I mean, what kind of risks are involved in the fixed income space and the bond space? I mean, only if we see a significant change in the monetary policy stance, which I doubt we will.
True.
Right, Nwabueze.
Yeah, exactly. I mean, and
go ahead.
All right. Okay. You did nail it all in terms of the yields and the returns that you see in between the two asset classes. On the fixed income space, it's almost immediate. You could get returns almost immediate. On the equities, you have to wait for various factors, which are more of like a bit more taking into account a bit more of what the general economic sense is. Those are the factors that come in there. Those are what the investors are looking at, especially in the equity space. I mean, I think you see an uptick in activities after the companies begin to post their results. A couple of companies are doing that already. After companies begin to post their results and people get a clearer sense of where the budget direction is, then people are going to know what kind of how much economic activities are expected to tick up, and people begin to reappraise whatever equity investment decision that they might want to make. But until that happens, no-brainer, returns on the fixed income space obviously pose much higher than whatever you get on equity within the short run, and investors will obviously hold on to that for now as an alternative investment until they get a more clear picture from the equity space.
Fantastic. Thank you so very much, Nwabueze.